Budget Committee, Republican Congressman Jim Renacci of Ohio. Congressman, it's great to have you with us. By appearing on the show, I think you confirmed that you're the earliest rising member of Congress to get up. So we appreciate you getting up early for us. Let's talk a little bit about this bill. I know that it was delayed this week. Is this the tax plan that you had hoped for? And now that you're hearing some members of your own party with questions and criticisms about it, do you think it's going to succeed?
Well, one thing I've learned about in Washington, no matter what you put out, somebody's going to criticize it, and that's the key. But this is a good tax bill. We have to lower corporate tax rates. Would I have liked to lower them even more? Sure, I would have. But at 20%, can now be competitive across the world, which is really important. When it comes to individual tax rates, this at least helps the middle income makers reduce their taxes so they have more spending. It's about growth. It's about growing the economy. I'm a CPA. I'm a business guy for 3 decades. I can tell you nothing's easy in tax reform, and it's easy to throw stones at anything that's put out there. But at the end, the goal of this was to lower corporate tax rates, make sure we're more competitive, and at the same time give lower income taxpayers an opportunity to keep more of their money, which is really important.
Well, let's go with that headline there, Congressman, lowering of the corporate tax rate to 20%. Why? The economy's doing well. Businesses are doing well in this country. We're at full employment right now. The optics of this to a lot of people not necessarily good when you're lowering the tax rate by 15%.
Well, again, this is about sustained growth. We can have our ups and downs. We can say the market's doing great today, but the market will have its ups and downs as well. We need sustained growth. As a business guy for almost 3 decades, I can tell you it was very tough every quarter to have to worry about what my tax payments were, and it was a big chunk. I used to say the federal government...
But we've had sustained growth so far. I mean, and that's the argument coming from the other side. There has been sustained growth so far.
Well, again, I'm talking about sustained long-term growth. We're talking about short-term growth. I'm talking about sustained long-term growth. And I'm talking about growth in the 4% range, not the 1.5% range. That's the big difference. We need growth at the 3 or 4% to make sure we're paying the bills that this federal government has right now. So we need long-term sustained growth that's able to continue to grow, and that's what this will do. Again, it's so simple for me as a business guy and also a family member. When I have to be able to make sure that I can compete as a business person, I have to have a competitive tax rate. We are not competitive today, and people will argue, well, the effective rate is 18%. We're still, whether it's effective rate, statutory rate, we're one of the highest rates in the world. And when it comes to the statutory rate, we are the highest tax rate.
All right, Congressman, let me ask you something. You brought up the issue of middle-income families. That's certainly something Republicans say they campaign for. But we did earlier in the program a side-by-side comparison of 2 families, same size, making the same amount of income. They're going to be affected by this very differently. You're going to have some that are going to benefit from it, but others are not going to be able to deduct mortgages, student loans. They're not going to be able to deduct all kinds of things like state and local taxes. How do you explain to middle American families that are going to look at this tax bill and see their bottom line get worse as a result of it, and convince them that you're actually helping them?
Especially those with a higher standard of living.
Well, keep in mind that before this tax model was put out, 72% of Americans don't itemize. So when you talk, look, and I was a CPA, I did those tax returns. People think they're getting a charitable deduction or they're getting a interest deduction, but 72% of Americans do not use the standard, they do not itemize. They use the standard deduction. We're doubling that. We're going from 12,000 to 24,000. Now it's almost 95% of the average Americans will not itemize. So these expenses were not being deducted anyway, and I saw that on many, many tax returns. Now, there are going to be some affected. You could take an individual in New York or an individual in California or maybe even an individual in Ohio, and their tax rate may not change much, may go up, may go down, but in the end, this was about trying to get the most so that middle-income Americans get a tax cut.
All right, well, I wish we had more time to talk to you. I predict, though, Congressman, that you do not have an easy road ahead. I wish you luck, but as you know, Washington is Washington, and that's what makes this country great. Congressman Jim Renacci, thank you. Appreciate